own gold, but I'm not buying it because it's at a new high already. If I were buying anything today, it would be silver.
Yes.
Silver is down 60% from its all-time high, and gold is at its all-time high. I'm not buying either, but if I were buying one, I would buy silver today. And I hope if opportunities come along, I will buy more of both sometime in 2024, because I do expect, and I don't know when, expect a serious bear market in assets around the world, because we know when things go really bad, all us peasants want to have a little gold and silver.
The current gold price hovers around the $2,000 mark, and while it doesn't appear poised for a significant surge, community sentiment remains neutral from a technical standpoint. However, a closer examination of the moving average reveals a buy signal, suggesting that the asset may be at a low point, ready to rebound. Despite a resilient performance in most of 2023, gold experienced a dip to $1,800 in October, yet a micro view of the chart indicates a steady increase since then. In contrast, silver prices hit a 2-month low on Monday due to a technical break below critical support and ongoing risk aversion towards metals tied to growth and demand. China's economic outlook, a crucial factor as the world's top consumer of metals, has contributed to this trend, with stock markets in Hong Kong and Shanghai hitting multi-year lows. On the other hand, gold continues to draw support above $2,000, driven by expectations of rate cuts, lower inflation, and sustained central bank demand. This has resulted in the gold-to-silver ratio reaching a 15-month high, emphasizing silver's relative affordability. Renowned analyst Jim Rogers acknowledges gold's new highs, but is reluctant to buy more due to its elevated value. Instead, Jim prefers silver, emphasizing its 60% drop from its all-time high, in contrast to gold's current peak. Jim foresees an increase in money printing as a strategy to stabilize economies, predicting that this is likely to boost the prices of real assets, including silver. Looking ahead to the year 2024, Jim forecasts a substantial bear market in global assets. Even as the stock market surges to record highs, looming risks could spark a steep sell-off later this year, according to a recent note from UBS. Despite the uncertainty surrounding the financial landscape, Jim hopes that holding these precious metals like gold and silver will provide some protection. We will present clips from Jim Rogers' interview with Francis Hunt. But before we do, if you want more videos like this, please hit the subscribe button and turn on the notification bell for more updates. Thank you and enjoy the video.
New high for gold? Well, gold is at a new high. It's already made new highs.
Beyond that, 2,500, 3,000. I mean, we're through 2,000. We hit 2,150, and we're winding up again.
I own gold, but I'm not buying it because it's at a new high already. If I were buying anything today, it would be silver.
Yes.
Silver is down 60% from its all-time high, and gold is at its all-time high. I'm not buying either, but if I were buying one, I would buy silver today. And I hope if opportunities come along, I will buy more of both sometime in 2024, because I do expect, and I don't know when, expect a serious bear market in assets around the world. And when it happens, I mean, come on, Francis, I'm an old peasant. Us old peasants like to have some gold under the bed. We like to have some silver in the closet, because we know when things go really bad, all us peasants want to have a little gold and silver. So I have some, and I hope I'm smart enough to buy more. Will it save me? I hope it saves me. I don't know if I'm going to make a fortune. I might. At times you can make a fortune when the world's collapsing if you own gold and silver. But if it just saves me, I'll be happy. I'll be very happy. I won't have to jump out the window. What will happen is when things are getting bad, governments around the world will start printing more money. They will print lots of money because they think that will save us. And that will mean that the price of real assets, whether it's silver or wheat, whatever it is, will be strong or stronger than other assets, because governments are going to try to save us, and they think money printing will save us. Makes it worse in the end, of course, but that's all they know. That's why central bankers work for the government. They can't get real jobs. They have to work for the government, and all they know when you work for the government is print money.
Yeah.
You can tell them it's not the right thing to do, but they'll laugh at you and say, you don't know what you're talking about. I said it's going to be the worst bear market in my lifetime. But that's not just another bear market. I've seen a few. But yes, everything you described will happen. They will panic. They will call in experts, learned experts, tell them what to do. Then maybe we may grab for gold and silver at some point because they're scared and they don't know what to do. They may try for electronic money. Probably we will have electronic money someday. I don't know what they'll grab for. These guys are not very smart, but they will grab for something because they want to save themselves. But unfortunately, I don't see how any of that, it causes big rallies, causes huge rallies. You know, in the big bear market of the 30s, there were some gigantic rallies along the way, even though the world was coming to an end. Times like this have often led to, well, they always lead to trade wars, but they often lead to shooting wars as well, because people get angry and they blame the foreigners. You cannot, I can promise you that in Washington, they're not going to say, you know, this is our fault and we're all going to resign. No, they're going to say it's the foreigners. It's the evil foreigners that are causing these problems. But throughout history, that's what people do. It's easy to blame the foreigners, and they always blame the foreigners first when things go bad.
Yeah.
And that's why it often leads to shooting wars.
In 2023, record inflows into US money market funds have sparked a lucrative fee bonanza for the asset management industry, a stark departure from the previous approach of treating the product as a loss leader. Acknowledging the current market momentum, Jim contemplates the prospect of its continuation. He speculates that the ongoing injection of funds into the market, facilitated by monetary policies like pumping and printing, might sustain the bullish trend. Meanwhile, China's stock markets are experiencing a meltdown, tallying losses exceeding $6 trillion since 2021, with no respite in the new year. Over a year later, China's economy struggles to mount a robust recovery, grappling with significant challenges stemming from a property crisis, deflationary pressure, and a demographic crisis. Despite recognizing the prevailing downward trend in the Chinese market, Jim also acknowledges the potential for a rebound under specific conditions. The volatile economic landscape in China leaves room for a turnaround contingent on factors aligning favorably. Let's get back to the interview.
I expect this is not over yet. I can see the signs that we're coming to the end. I've seen these signs before. A lot of new people are coming in. They inexperienced, they're buying everything. They say the stock market always goes up. It's fun. It's easy. They're always talking about how easy it is now. Well, that's happened before. The Japanese market, as I said, will probably make new highs. But as far as I can tell, and my market timing is never great, but I suspect that we're coming to the end, that 2024 will be the end, but it might not. Who knows? They might just keep pumping and printing and pumping and printing for a while. The Chinese market is down. It's a gigantic market. They could somehow get it up. The Japanese market has not made an all-time high in over 30 years. It can make an all-time high. So there are still places that markets can go up, which is why I have not started selling short yet. And when I start selling short, and my timing is not any good, so it probably will not be the right time. But you know, I don't see any way, Francis, that this cannot be the end. Not today, not today. But as I look out the window, everybody, this has all happened before. In every bull market, it happened. It ends this way. I don't know. Maybe you know something I don't know.
No.
And maybe I'm usually too early. I'm obviously too early again, but I'd rather be too early than too late. As long as I get in the right assets.
With gold at approximately $2,000 per ounce and silver at $22, the future looks promising for both metals as they are projected to reach new highs in the coming months. Furthermore, as global economic uncertainties persist, investors turn to traditional safe haven assets, particularly gold. What are your insights on the future prices of gold and silver, considering their current upward trend and the prevailing global economic uncertainties? Share your thoughts in the comment section below. If you find this video informative, remember to support our channel and turn on notifications to stay informed about our latest videos. See you in the next video.